Hello everyone, I'm Dr. John Gurban, PhD in Mechanical Engineering. Today I want to speak about the fundamental analysis of cryptocurrencies and finding fair prices for buying them. I hope you like this video. Okay, there are two common approaches for analyzing cryptocurrencies. One is technical analysis, which I personally do not use, whether for crypto, stocks, gold, or any other asset class. The other is fundamental analysis, which is what we're going to discuss today. When it comes to cryptocurrencies, we can say there are two types of fundamental analysis. The first is general fundamental analysis, which can be applied to many cryptocurrencies and provides us with some information about their value. However, this method is not that precise, and it only gives a general direction or framework for evaluating the cryptocurrencies. But there is another type of fundamental analysis that approaches the subject more scientifically and provides relatively accurate results. As an example, as you can see in this image, I previously uploaded a video using this method, which you can watch on my YouTube channel. Okay, now let's begin learning fundamental analysis for cryptocurrencies. In this video, I have included both types of fundamental analysis approaches. Okay, on this page, the methods that I will teach you in this video are mentioned. You can see the list of methods. I hope we will have a good learning experience together. Okay, first method. Some market participants believe that the overall trend of tens of thousands of cryptocurrencies is determined by Bitcoin. They claim that if Bitcoin is bullish, the entire market is bullish. And if Bitcoin is bearish, the market is bearish as well. So, for this group of researchers, Bitcoin serves as a guiding light. Some other researchers believe that there is a positive correlation during bull markets, but in bear trends, conditions change, and the Bitcoin and altcoins may fail to forge a correlation. Each of these two groups of researchers bring a part of the past to show the validity of their claim. But in general, it seems that Bitcoin largely determines the general direction of the cryptocurrency market, especially in bullish market. But in any case, this method should be used with caution. Let's look at the figure to examine how accurate this claim really is. In this figure, in a 4-year period, the trend of Bitcoin changes is compared with Ethereum. It can be seen that almost the general trend of both changes is the same, and this is an example of confirming the method presented here. But it should be noted that this method is not true everywhere and for all cryptocurrencies. Please pay attention. Okay, next method. In this method, which is actually a simple and somewhat scientific approach, the idea is that in any business, the business owner must make a profit in the long term, otherwise they will shut the business down. This concept is applied to cryptocurrencies as well. Let's understand this with an example using Bitcoin. You know that Bitcoin is mined using miners. It's clear that miner owners want to make profit and avoid losses. The Bitcoin protocol is designed so that the reward given to miners is reduced every few years. The halving phenomenon, which has occurred 4 times so far. Okay, some people believe that with the rewards frequently being cut in half, the price of Bitcoin must rise in the long term so that miners do not face losses and can achieve the profit they seek. This is the core idea of this method, which I explained using Bitcoin as an example. You can watch more detailed and scientific discussion in the video I mentioned earlier, which I previously posted on the YouTube channel using data from the University of Cambridge. Okay, let's take a look at this image. In this image I shared with you, I've included the top 5 countries active in Bitcoin mining based on one of the published statistics. Of course, these rankings can change over time, as you may know. Okay, let's go to the third method. In this method, 9 semi-fundamental parameters are examined. These 9 parameters can be found in different websites, and you can compare them across different cryptocurrencies. Now, let me explain each of them. The first parameter, team, examines the team behind the cryptocurrency, behind the project. For example, it checks whether the team members have experience managing projects with capital beyond $1 million. It also assesses whether the team has enough marketers or network testers. The second parameter focuses on advisors, meaning it checks if the cryptocurrency projects have advisors and whether these advisors have been successful in their previous advisory roles. The third parameter is the brand, which examines, for instance, whether the community of this cryptocurrency is as active and large as the community of all cryptocurrencies. The fourth parameter deals with the product, assessing whether the product of each cryptocurrency's project has real world utility or is merely just a theoretical idea. It also reviews the roadmap to see what roadmap the member have, core project team. Okay, the fifth parameter, the coin, checks if this cryptocurrency has the capability for 1,000 transactions per second, for example, and whether this cryptocurrency has shown progress over time. The sixth parameter addresses the level of activity of the cryptocurrency's team members on social media. The other parameter, communication, relates to whether the team members of this cryptocurrency are ready to engage in online debates about their project and whether they have provided an email or at least phone number for people to contact the team members. The other parameter is business, and it addresses whether the main company behind the cryptocurrency has complete transparency and whether it has a professional investor backing it. The final parameter addresses whether the company has made its codes publicly available for free so that everyone can review and even improve these codes. I have suggested different websites for the 9 parameters I explained above, but you should definitely check other websites as well to ensure you obtain correct and up-to-date information. Please pay attention. After finishing this video, you can watch again this video and check this table more carefully. Okay, the next method. Okay, essentially in fundamental analysis of all assets, from stocks to gold, interest rates are of great importance. Cryptocurrencies are no exception to this rule. In this figure, I have included a figure that shows the changes in Bitcoin's price and interest rates over a 15-year period. Okay. Bitcoin's price changes are shown with the yellow graph, as you can see, and interest rate changes are shown with the brown level. Bitcoin price in USD, left axis, versus the Fed fund rates, right axis. The horizontal axis shows the years from 2010 to 2025. In this figure, for example, Bitcoin's substantial rise during the pandemic aligned with the near zero interest rate environment as the Federal Reserve's expansionary policies injected liquidity into financial markets, fueling demand for assets like Bitcoin. On the other hand, Bitcoin's price downturn in 2018 to 2019 and its stagnation in 2022 align with periods of rising interest rates, as you can see. But please pay attention. The overall conclusion is that high interest rates are bad for assets like Bitcoin. But of course, you might wonder why Bitcoin still grew despite high interest rates in 2023 and 2024. One reason could be that investors were essentially buying the future. They strongly expected interest rates to fall, and that is exactly what happened. Okay, the next method. The next metric for the fundamental analysis of cryptocurrencies is the network value to transactions ratio, NVT ratio. This metric is calculated by dividing the cryptocurrency's market capitalization by its daily transaction volume. Some compare this ratio to the price to earnings ratio, PE ratio, in a stock market. However, in my opinion, this comparison may not be entirely accurate, as the PE ratio in the stock market is more important. Anyway, to obtain this ratio, you have two options, as you can see. One, manual calculation. Market capitalization is available on almost all data platforms, and you can find the daily transaction volume on, for example, coinmarketcap.com. You can then calculate the ratio yourself. Number two, direct observation. You can view this ratio directly on websites such as glassnode.com. A high NVT ratio generally suggests that the cryptocurrency's market value is high relative to its daily on-chain transaction volume, which is typically considered a negative sign. However, this metric requires interpretation, as it can vary based on the nature of each cryptocurrency. For example, in the case of Bitcoin, since many investors choose to hold it long term rather than trade daily, I myself hold it long term too, the transaction volume decreases, which leads to a higher ratio. this is not necessarily a bad sign in that context. Please pay attention. Therefore, this ratio should be used intelligently rather than blindly. Some suggest that, generally speaking, an NVT ratio below 20 may represent a buying opportunity, while a ratio above 80 suggests the risk of a price bubble. The range between 20 and 80 is considered neutral. My advice is not to rely solely on these numbers. Instead, analyze the historical data of the NVT ratio for the specific cryptocurrency you are researching. Observe at what historical levels the price typically began to decline, or at what levels it started to rally. Find the appropriate thresholds, especially for your studied coin. Okay, let me show you an example. You can see an example of this ratio in this image. In this image, I have selected a 2-year period for Bitcoin. The gray graph represents the price of Bitcoin, and the yellow graph represents the NVT ratio. I recommended pausing the video and carefully examining these charts for a while. By studying this image, you have likely realized that it's not as straightforward as it seems, and there is no foolproof rule for this ratio. It's hard. Instead, this method should be used beside several other methods to potentially achieve excellent results. Okay. This concludes the first part of our video. I will post the second part on the channel within the next week. Okay, I hope you enjoyed today's video and have a great day. Thank you for watching this video. Thanks.